Good afternoon, this is Todd Colvin coming to you from the floor of the CME Group. We are talking equities and E-mini S&Ps holding near the all-time highs. 2550 seems to be a pretty popular level. We traded there most of the session before the SEP FOMC minutes and after, so we didn't really see much reaction pre and post minutes, which I don't think is a big surprise. When you're on the all-time highs, the technicals kind of go out the window. And if you look downside, there really isn't a reason to sell equities here. And, the Fed came out and they talked about inflation being a concern, but low rates will keep equities higher. Likewise, if they said inflation was going through the roof, that's not necessarily going to take away from equities today. So right now, equities are going to continue to trade regardless of what the Fed does to the upside. They need a reason to go down. Right now, they just don't have it. And if you look at volatility, even before the announcement today, volatility, we did get a modest uptick, but nothing that would raise too much of an eyebrow. And then after, of course, we went down and settled lower. So volatility continues to trend lower. We have moments of upticks like we did yesterday, but I don't think that was really even an uptick. It was just more of a non-down tick. So volatility continues to trend lower. We remain on the all-time highs. What's ahead? Well, I think that the earnings season kicks off. The banks are really what the market looks at. If the banks can show us stability and growth, that's where we get our trend from. At least we can start to see some inkling of how earnings are going to go. And the banks themselves, we get the big names that start coming out tomorrow that will set the tone for earnings. So right now, I think equities on the all-time highs. There may be a little risk of a pullback if they don't come in as bright and sunny as it looks expectations are priced for. However, dips are going to be bought. So it's how low can it go before people start jumping in with cash on the sidelines. So right now, really nothing stopping the equity train that I can see, at least in the short term. Equities may cause a little bit of a speed bump, or earnings may cause a little bit of a speed bump as we move forward. But I think dips are going to be bought with both hands, at least heading into year end. That gives us another 2 months of an equity rally, or at least an equity hold at these levels. This has been Todd Colvin coming to you from the floor of the CME Group.